Hello everyone and welcome to today's major markets update for Wednesday, August 31st, 2021. We are going straight into September tomorrow, so we are going straight into the charts as well. And let's have a look here at the Dow Jones. I really kind of want to review what I wrote to you yesterday because of this very significant development already led by the Dow Jones that we overlap with this potential one wave here late June. Remember, I was tracking the potential for a 1, 2, 3, 4, 5 in green wave higher. That didn't happen. That this can turn supposedly into a diagonal is now very low odds because diagonals don't really look like this. This would be a very weird diagonal. So we have critical overlap. This wave 5, 9 out of 10, not going to happen in my humble opinion. So we're going to look at something else. The other option is that we completed wave A, we are now in wave B, and eventually wave C. Remember, if this is a black wave B, it can get even more complex, that the current decline is only wave A of wave B. We'll get a B wave and another wave C. This can turn into a irregular flat wave A. Larger wave B. That also brings me quickly to the point that if we are, and it starts to look more and more like it in super cycle 4, it is going to be an extremely difficult market environment. If anything, this year so far has already been extremely difficult. Every time one is tracking a larger impulse to the upside, as I showed you here with the 1, 2, 3, 4, 5, it simply fails to do it. So this starts to more and more suggest this is not a new bull market, but indeed a super cycle 4. Please also remember that you can look anywhere you want, but I have not found it anywhere who has the larger super cycle 4 roadmap for you. Nobody has it. They all say we've topped, and that's about it. But no larger super cycle wave 4 roadmap as I have for 10 years out. I think you will not find it anywhere. And if you do, please share it with me. I'd like to see it. I can't find it. So that is truly unique. And I hope you really enjoy it. I don't want to focus all the time on these small scribbles. You know, we got to see the forest through the trees. And right now, this market starts to suggest the forest is a super cycle 4. Back to the fourth wave. Fourth wave are messy, overlapping, hard to forecast, hard to track, hard to trade environments. So you really want to trade the shorter to intermediate term trends, which most of the time last for a couple of weeks. Like we had here this trend down from April into mid-May. Then you have a 2-week trend to the upside, 2-week trend to the downside, about 4-week trend to the upside, couple of weeks trend to the downside. That is the pattern we will see most likely going forward. So again, this brings me back to the Dow Jones. This is the option where we have wave A. This is also based on what we see for the S&P 500. And here we are in wave B. But remember, wave B can become irregular. We can go below the June low. We don't have to. So this doesn't have to be A, B, and C. This can also turn into a more complex, something like this type of correction. It wouldn't surprise me, and I almost start to feel a little bit better for it, so to say. So we are already in a deep enough retrace. So let's assume it's going to get complex. Let's assume that, okay, we are in a wave 4 of a super cycle degree, never seen before. So pretty much all comparisons we have with the past can be thrown out the window because the past doesn't have a super cycle 4. Then we are comparing major 4s with a super cycle 4, or cycle 4s with a super cycle 4, or cycle 2s. So there is no comparison with today's market. So then historical comparisons kind of fall flat on their face. Breadth thrusts mean less, all that good stuff in a bad way, so to say. So that also, again, brings me to the lesser predictability of this market. It doesn't mean we can forget everything and all is lost. We had a very nice trend here that we were tracking 1, 2, 3, 4, potentially 5. It didn't happen, and then we know something else is going on. So there's plenty of good opportunities out there. Follow the trend, and as I've said before, if you have a hard time with it, then use my ETF trading system. That is a good trend following system for the short to the intermediate to the long term. So last but not least is of course this potential wave A, wave B. Let me put this on the map. And then we have here wave C, now underway, and it is going to develop it as a impulse, as shown here. Then the Friday's high based on the Federal Reserve was a B wave or a 2 wave, and this is 3, and this is 4, and this is 5. So actually let me upgrade this a little bit better, because if it is a C wave, then this should be of course 5 waves. And we are going to revisit about the June to July lows, and may actually fail doing it, okay? What we have here is a false breakout. We broke above the downtrend line. That by itself is bullish, just as we broke above this downtrend line earlier in the summer. That was bullish, right? We broke above it and held. That was bullish. Broke above it and didn't hold. We got the retest the next day, and the day after it broke below it and completely failed. So false breakouts are indeed a hallmark of bear markets, I would say, and not of bull markets. In bull markets, you want to see things hold. So here we had a short-term bull market. Note we have retraced 62% of the entire decline since the all-time high January 3rd. Also note, this is not an impulse lower in any form or fashion. This is a nasty overlapping looking price action. This is corrective. So even within a decades-long super cycle 4, we want to see corrective price action, meaning overlap. Impulses are clean and clear, very little overlap to both the upside and the downside, because wave 4 doesn't overlap with wave 1, wave 3 doesn't overlap, etc. We're not seeing it. We are going down, up, down, up, down, up, down. Lots of overlap. Bigger picture-wise, this is still to be considered corrective price action. Clearly, the shorter-term price action is now lower. Pressure is to the downside. I see no letting up, and I'm going to track this 3, 4, and 5 pattern. So that brings me then with the A, the B, and the C to, oh, I unfortunately closed that window, to this bigger picture Elliott wave count that I've shared with you. Sorry, I have to open that again for you. Let's see here if I can find it. There we go. We'll launch the chart. Here we go. Sorry about that. There we go. The bigger picture wave count is based on what has happened since pretty much the 1920s, which was super cycle 1. Sorry for the faded price action, but the actual S&P 500 didn't start trading till 1950. So this is inferred data based on, of course, previous S&P, I would say 50, I believe it was. And then we have super cycle 2, which was a zigzag. We had cycle 2, or primary 2, which was a zigzag. So cycle 2 was a zigzag. I believe super cycle 2 was also a zigzag. Yes, it was zigzag, zigzag. Then we had primary 4 as a regular expanded flat lasting 4 years. Then we had cycle 4 bottoming in 2009 as an irregular expanded flat, lasted 9 years. Then we had the 2020 low based on COVID as a irregular expanded flat, lasted about 2 years. We had major 4 low that was, I would say, in early 2016, before the election of Donald Trump later that year, was also a regular flat. So it is quite logical to assume that super cycle 4 will become a regular to irregular expanded flat. And that one I have painted in here. So we have here then the completion of primary 5, of cycle 5, of super cycle 3. We completed major A, we completed major B, so we've completed this path, and we're now in this path. Lower. And I know this path lower points substantially lower, but it is just a general path that I'm looking for. It's following this price action quite nicely. As I said on Friday in the summary slide, spoiler alert, it starts to look like this. So we had to be on our toes, but it's going to take a long time before we finally figure it out. It also means that the decline will be messy, overlapping, and not as bad maybe as many might think. It's not going to be like 2008 and 2009. That won't happen until this actually cycle C of supercycle 4 happens. That's going to be a 5-wave decline, a massive crash. That will be something extraordinary. But that's many, many years out. And we're first here in this corrective path. Remember, 4th waves are messy overlapping price action. 9 out of 10 times they're flats or triangles. In this case, most likely based on historical evidence, a flat, because all previous 4th waves, the primary, major, and cycle degree, were flats. So here we have it. This is something you won't see anywhere else. And if you start doing it, you know they've copied my work. So that suggests wave B is completed, and now we're in this wave C. And that will then complete wave A, and we're going to start a larger bounce for wave B, probably into year's end, and then we get a wave C, etc., etc. So here then is the S&P 500 chart with the bullish count that we were tracking. Okay, the bullish cutoff is 39.4586. Well, we are getting awfully close because we're only about 9 points away. So the futures market will probably take care of that. I wouldn't be surprised. And that will take this entire option off the table. A normal 4th wave should have bottomed here, which we did last week. We started rallying, but the market decided it was not good enough. And now we need to look at this option, the A, the B, and the C, which is a more drawn out, bigger B wave. Then we are essentially still in this black wave B here. I have the wave degree a little bit different here, but that is fine. And this is A, then this is B, and this is C. You get the idea, right? We got to track different options. Maybe this super cycle 4 is not going to last a decade plus. Maybe it's going to be a little bit faster. So we do want to have also an upgraded version in that when we are going into the next larger decline, that is then already this A wave here, which I have in this option a few years out. The thing is, we don't know. We don't know which of these wave degrees we're currently truly dealing with, so I have to keep an open mind. But we do know this is some sort of overlapping to the downside price action. And once the larger A wave bottoms, expect a very strong rally that's going to retest the all-time highs. For whatever reason, I don't care if it is QE by the Fed or whatever the reason is, the Fed's going to buy everything that they can get their hands on. The why doesn't matter. What matters is the price pattern. So this still looks good for this option. We can bottom somewhere around 38.50 and then we move higher. Alternatively, just as I showed you for the Dow Jones, we're going to get this impulse lower. Starts to look better this way, I must say, as an impulse lower. So the NASDAQ then, or the NASDAQ100, is also, of course, awfully close to invalidating the 1, 2, 3, 4, 5 setup. And we get maybe something like an A wave, a B wave, and a C wave. Again, if we are in this super cycle 4, predictability of exactly what's going to happen is, of course, smaller, but we just track this as a potential impulse lower here as well. And I prefer, honestly, this impulse lower. And from there, this would, I think, also fit seasonality, average market seasonality in general better. From there, we should then rally. Remember, this is not accurate in time. This is only accurate in price using standard Fibonacci-based extensions for 3rd, 4th, and 5th waves. So we have our options on the table. We can pretty much say the potential impulse is dead. The Dow Jones is already dead. The NASDAQ 100 and S&P 500 are getting very, very close. So we have to consider that we are indeed in this much larger supercycle 4 wave. Considering everything that's going on in the world, it might not be a strange thing with the hyperinflation, hyper energy prices in Europe, of course, all the political turmoil, left versus right, all those things going on. And that might simply be a burning off of all the excess that we've had over the last 10 to 20 years. So let's have a look then at market breadth. Shorter term, we're bottoming out already, a little bit above the ideal bottom zone, but no buy signal. We had a good buy signal here in late June. We had a good sell signal here in mid-August. So this one has captured most of the rally pretty good. Again, you won't get in at the bottom and you won't get out at the top, but it's pretty darn accurate. Trying to identify trends. Now here is an interesting chart as well. This is the McClellan oscillator for the S&P 500. I was monitoring potential positive divergence already last week. Well, it completely got negated. So that is off the table. What we now see is a McClellan oscillator all the way in the doldrums at about minus 120. Previous rallies materialized from about these lows, most often with positive divergence. So that would be a nice setup for a wave 4, wave 5, like we had here, 4, 5, 4, 5. So we get a rally, a drop, and the last drop is simply on less weakness, more strength. That's positive divergence, and that will kick in the next rally. So I think we're getting pretty close to a significant bottom, which would fit with the 3, 4, 5 decline. So I would say get ready. This doesn't tell us how low exactly, only of course the Elliott Wave and price action will tell it, but this tells us we're getting pretty darn close to an important low. If we zoom out a little bit more, let's go back all the way to the COVID low. Here you can see we're getting pretty darn close to very oversold levels. These are lows that coincide with very important market lows. So this looks good for a counter trend rally. Okay, for either the aspect here, the A, the B, the C. I wouldn't be surprised if that's the case. That would also give us a rally into year end as well, fits with seasonality. And it would be a nice time symmetry as well between the decline that we've seen so far and then the counter trend rally. Counter trend rally always needs to be 3 waves. So we have 3 waves lower. Again, I cannot find any form or fashion this to be an impulse. This is corrective. Then we get a counter trend rally, also corrective. And then we maybe get 5 waves lower. And this cycle A is a potential flat. Then we get cycle B, which is going to be 3 waves higher, retesting maybe close to the all-time highs. And then we get this C wave, similar to what we had here, this entire price action since the 2018 highs. So this was wave A here. This was wave B. You can see how strong wave B was, but this was a B wave, but with quantitative easing. We might not see it this time around, so maybe the B wave won't be as strong. And this was a 5 wave C wave. So we are somewhere here right now in the bigger picture, okay? So we might be somewhere here. We get the B wave, we get the C wave, as I showed you here, right? You get the C wave right there, and then you get a good long, strong counter trend rally, a larger B wave before the next C wave lower happens. But everything is going to be threes. 3 waves lower for wave A, 3 waves up for wave B, and then of course the C waves will all be 5. So right now we are in a very tricky overlapping market environment, but I think we're getting closer to a bottom than to a top, either as a impulse lower and then we bounce, or as a 3 wave lower. So we have to keep an open mind. Considering the setup, it looks like 5 waves lower is a little bit more acceptable, but I'll keep an open mind. We might just not get the 5 waves lower, but that's my preferred view. And then after that, we should see a considerable bounce based on historical evidence, even on how things have reacted during the current bear market. Even here in January 2020, we got a nice rally, followed by another decline. Even here in June, we got a nice rally, followed by another decline. So that is going to be the preferred path forward. Once this positive divergence is confirmed, we'll get a nice rally, most likely followed by another decline. All right, so that's all I have for today. Oh, last but not least, the summation index is of course now on the sell. So everything is pointing lower, shorter term, intermediate term. So we'll let this unfold. I'm still looking for lower prices and then a 4th wave bounce at the minimum soon. And after that one completes, we should get wave 5 that would ideally set up this nice positive divergence on the McClellan oscillator for the S&P 500 and possible other McClellan oscillators for other indexes as well. And from there, we then should see a, again, multi-day to multi-week rally. For now, please have this in your back pocket. I think the most detailed potential roadmap available to you for what's going to happen over the next few months to years. This is not a short-term trading path. This is for the long term, so you can kind of get an idea of what we're going to get over the next couple of years. And with that, thank you so much for listening. Take care, trade safe, see you all on Friday.